Welcome, welcome. It's Walter here, and you're at the Naked Trading session. Thank you so much, guys, for spending time. I know that your time is valuable, and I'm glad that you're here with us today. What I'd like to do is, what I'm trying to do right here, actually, on this chart, I'm going to zoom in so you can see it in a second, but I was just looking to see if there was a zone I was missing here, and it looks like possibly was missing a zone, and let me show you why. On this chart, I was more interested in the down move, of course, back last year in July. This is the Swissy daily chart, and I thought, well, what happens if there was, a zone up here that that I didn't quite capture on the chart? So let me zoom in and show you what I mean. It looks like, for those of you that haven't been here before, the foundation of what we do as naked traders is we identify support and resistance zone. And that's what we have here, is a support and resistance zone. The reason why this is a support and resistance zone is because there are multiple touches on this level. Now, you'll notice that some of these touches go through the chart, through the line here. So this has gone through that level here, which is 95.22 on my chart. So it's a fat zone. Sometimes it'll go through a little bit. Sometimes it'll just kind of brush up against it like this one did. And sometimes it'll hit it pretty spot on like this one right here. And that's what we have. We have multiple touches here. So this is what I would call a support and resistance zone. I've got support, 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 and support. And then I've also got a little bit of support over here on the way through the zone, right there. And then I've got a little bit of resistance right here on the way through the zone. What will often happen is if the market doesn't reverse at this zone, it will probably pause there, like this candle. Let me zoom in. Take a look at this candle right here. See this candle right here? Let me show you. This candle right there, this dog. See how this candle actually closed right on the zone. So even though the market was getting ready to push through this zone, look at what happened. It closed right on the zone. So sometimes it'll come down, hit the zone in reverse, like these two spots over here. And sometimes, and this one too, it reversed slightly just for a few days and then came back down. And it closed on the zone and then it fell through. And then look what happened on the way up. Same thing on the way up. The market touches the zone but couldn't break through it until the next day. That's the kind of thing we see all the time. So fast forward to today. So this is around 95.22. Fast forward to today, and what we see is on this zone right here, we have a pretty good looking, this is what's called a bearish big shadow. Bearish big shadow. If you've been here before, you know, hey, Looney, welcome. And MV is here, and HH. There's something a little bit weird about a bearish big shadow. What is it? It's a reversal signal. It gives us a clue that the market may want to turn around here. Remember, last time the market came up here, it turned around here. It also printed a bearish big shadow right here. And then it printed one just, well, today isn't over yet, is it? We still have a couple of hours. But if this candle ends up looking sort of like it does right here, it'd be a bearish big shadow. Here are the characteristics of a bearish big shadow. It's an engulfing bar, so it has a higher high and a higher low. Oh, sorry, a higher high and a lower low. And both of these candles here qualify, right? Because this candle here has a higher high. The high's up here, higher than that candle, and it's got a lower low. So it's an engulfing candle. Same thing here. It's got a higher high, got a lower low. It completely engulfs the prior candle. The second thing is it must really print on the zone. And if you don't have these rules, if you haven't been here before and you haven't emailed me the rules, you get the book with the rules if you don't have it, okay? The other thing is that it must print on a zone. And the rule book for the big shadow trade are available. Email me right here, and that's Walter at FXJake, so you can just email me. Okay, there it is, right there. I just typed it in. Must print on a zone, right? We must have the, if it's a bearish candle like this one is here, like a bearish big shadow like this one, then the close must be down near the low. If it's a bullish one, then the close must be down near the high, up near the high. Notice that this one hasn't closed yet, so we don't really know what's going to happen today, but it is a possible bearish big shadow. Edward says, why do most traders use MT4 instead of MT6? I didn't know MT6 was out yet. Oh, MT5, yeah. I think most brokers use MT4, Edward. I don't think it's just most traders. I think it's actually most brokers use MT4. My understanding is that MT5 may have some problems on the back end, so brokers are a little bit reticent to adopt it. That's my understanding, but I don't know. That might be just a rumor. And obviously, if the brokers are using it, then we traders are stuck with it too. I don't really use MT4 as a trading platform. I just use it for the chart. Dave has a good point. He says, the indicators and experts need converting, and people don't want to go into the trouble to do that. That's a good point. I didn't know that, Dave. The next candle must print lower or higher than the big shadow. So see how this candle right here, so how I use this is like, okay, if I'm going to trade this big shadow over here, I go, well, I'm going to stick my stop loss right there, and I'm going to stick my sell stop down here, a few pips below the low of the candle, and I'm going to put my profit target down here, a few pips above the next zone here. And then what happens is the next candle's got to print lower than this. If it was a bullish big shadow, it would have to print higher. It pushes through my sell stop, and then in a couple of days it takes to go down to the next zone, and it cashes out down there. I would have also probably had another profit target down at the next spot on the chart, which probably would have been where these lows are here. And I moved the stop to break even once the first target hit. You can see it would have come up and hit break even on that last one. So there you go. And now this candle right here, again, this has not closed yet. This trade has not really started yet. But again, if it did take off, I would do something like this. I'd have a second take profit down here. I'd have my first one around here, around 93.09. And that's because of these recent lows here and here, where these bars closed and closed here. So I want to see if this candle does print like it does here, it's a possible sell trade here, targeting down here. That's 166 pips. Stop loss is 121 pips away. And then the next target would be 358 pips way down here. So that would be a possible big shadow setup on the Swissy. Again, on my chart here, I believe I have an hour and a half before the market closes. So I'm not sure that this is going to print like this, right? I'm not sure that this is going to be a big shadow. Now, what are some of the minuses about this? Well, there's some bad things about it. Let's go pros and cons, because another factor with the big shadow is that we really should see the largest candle in some time. And what do I mean by some time? I mean usually at least 5 candles or so. Now, I'd say that this one, the last big shadow, came close, because what's the largest candle is the range, right, from the high to the low. That's about 157 pips. Let's see, is it bigger than this candle down here? Yeah, it is. This is only 141. So this is the largest candle. It's bigger than that candle, clearly, because it's a big shadow. It's definitely bigger than that one, and it's bigger than that one. And these, we'd have to go all the way back to maybe this candle to see a candle as big, or possibly this candle. So it's definitely the largest candle we've seen in 5 candles. Now compare that to this candle. Unless it really takes a fall in the next hour and a half, which is highly unlikely during the during the period that we're in right now, which is sort of the interbank period. Unless this candle really falls, and that's unlikely, then it's not going to be the largest candle we've seen in a while because, look, this candle is bigger, and maybe even this one. Let's see, how many pips in this candle? 137, yeah. And our candle here has only 120 pips or so, 110. So it isn't the biggest candle we've seen in 1, 2, 3 candles. That's a negative. That's a reason why this bearish big shadow may not be an ideal setup. So Ulrich is saying, what about contraction? It seems the price range at the first target. I don't know what you mean, Ulrich. You mean the market's been tightening up? I don't understand. Sorry. I think that, yeah, so it's been tightening up. So yeah, so it might explode up. So what, for example, when you see candles like this, I think this is what you're talking about, Ulrich. This is how I view it anyway. When I see candles get tight like this right here up against the zone, it usually means they're going to explode beyond the zone, and that's what happened right here. You can see that happen all the time when the market gets up against a zone, and if it has several touches there, sometimes it means it wants to break out and go, like this area right here. So anyway, I just wanted to point out this is a bearish big shadow. It's not an A+ trade. I would rate it probably like a C+, because it's not that big candle. The big wide range bearish big shadows are the best. Those are the best ones that I've seen. A lot of people don't like to take them because they don't have the big bearish big shadows have wide stops. But what I found in my trading and testing is that the wide bearish big shadows actually do have a high win rate for me. So that's why I like the big ones. Again, the idea is that the market really wants to fall. If it prints a big bearish candle, it usually means, okay, I'm ready to turn around here and fall. Same thing with a bullish one. We had a very slight bearish big shadow here on the CAD Swiss yesterday. Yes, Sveland says that his last bar doesn't engulf the previous bar. That's going to be due to the closing time. That's right. You're right about that. This chart right here closes in about at 5 p.m. New York time, right? So it's not 5 p.m. in New York. I think it's 3:30 in New York. So it's we've got an hour and a half. Some charts are going to close at different times than 5 p.m. New York time. Yeah. This one right here was another slight bearish big shadow. Again, same problem as the previous one. It wasn't the biggest candle we've seen in some time. Slightly engulfed the prior bar. And it did trigger, and it did go to the first zone. Look at all these candles right here that were up against this zone, and then the market exploded up. This is kind of what we were talking about a minute ago about, when several candles get really tight and push up against the zone, it usually means the zone isn't going to hold any longer. And that's what happened here. It just broke through. The problem is the market's now touched that first zone. It hasn't come all the way down to this area where I'd like to take profit on this one. That's why it's nice to have really bearish, huge candles. Because if this was a huge candle, if that huge candle would have closed beyond this zone down here, then we would have had a clean shot at this next zone down here. But instead, if I take this trade, I have to hope and pray that it's going to break through this level. I don't like to do that. I like to see trades that have a clear shot at the profit target, a really clear shot at the profit target. So that is an interesting one, but it's not ideal. Again, that was probably a C+ trade as well, just like the Swissy trade right here was a C+ trade. If it closes like it is, we don't know what the closing price is going to be. But some of our other charts here, we talked all about. This right here is this is just a free forum that I have with naked trades and a lot of naked traders. So that's what that is. If you guys are wondering what that is, it's just a free thing. If anyone wants to go there and watch people trade or ask questions, we do all that stuff there. But that's not the main. That's the only reason why that was there from another webinar. So let me show you something here. This is our euro yen, okay? And the euro yen had a really interesting setup because it was one of those situations where actually let me show you a better example. It's the same principle but it's a better chart. Let's go to the Euro Aussie. Okay, here's the Euro Aussie here. Now the Euro Aussie printed a nice bearish kangaroo tail right here. See where this arrow indicates? That's it right there. That's the bearish kangaroo tail right there. It has all of the nice features of a kangaroo tail. Again, a lot of you know these features. You've been here before. If you don't know what the kangaroo tail is all about, just email me at walter@fxjake.com. I'll send you the book, the kangaroo tail book, or the big shadow book, or both if you want them both. But the point is, it's got a nice long tail. The open and the close are in the bottom third of the candlestick. The open and the close are inside the previous candlestick. And then the market, it probably would have barely just triggered. The low here is 1.3073, and the low here is 1.3070. So it probably would have triggered by the spread, because the spread's about 8 pips on this pair. So, putting a sell stop at 69 or whatever, it would have triggered because of the 8 pip spread, right? So that probably would have triggered here. If you have a really tight spread, maybe not, but unlikely. Now, look what happens. It comes down and hits the zone, comes back up, messes around. Finally, we get a big clue here with this bearish candle that's going to break through, and it goes. Now, let me talk about profit target. Yeah, Jack is right about if you're comparing different brokers, obviously the hourly candle is always going to be the same. Now, sometimes the weekly candle will be a little bit different, Jack, because some brokers have that really small weekend candle that I just ignore. So if you're looking at daily charts and you have that little tiny weekend candle, I just ignore that. Now, this broker doesn't offer that, so it depends on which broker you're using. So on this bearish kangaroo tail, the obvious target was this first zone right here, but that was so close. There was another target. And guess where it was? It was down here at 1.27, all right? Now, why would I make that as a zone here at 1.27? Let me back it up here. In fact, let's go to the monthly. And you'll notice that we don't have any price action down at 1.27 going back. In fact, the all-time low on this pair was, according to this chart, again, the euro only goes back 10 years anyway, 11 years anyway, so we don't, the euro, it really is the low for the Euro Aussie. We had a kangaroo tail here. This was a bullish kangaroo tail. Then we had a bullish big shadow down here on the last touches, right off of this zone here. And yet we had a sell signal into the zone. Well, I've talked about this before, but one of the things I like to do for profit targets, I'll do a fib extension. So I've got from this low to this high. It doesn't matter, any low to any high. You can use, I could use this one over here. I could use this one over here. The point is, I want to see where might the market go if it breaks out and makes an all-time low, like this pair did. And this was where it ended up at 161% retracement, 161.8% extension of this move here is right here. And I lined it up with 1.27 because that's an even number. There's actually another one all the way down here at 1.20. That's the 261.8% extension. So that's what I do. Whenever I don't have a zone as a target, I like to use fib extensions. And that's one way that I can manage my trades when we make these all-time lows, like the Euro Aussie. Again, remember on the Euro Aussie, we've had some really nice signals lately. We had this bullish kangaroo tail. We had this bearish kangaroo tail up here. So this is a sell signal. It didn't trigger on the next candle, though. So let's zoom in so you can see. See how this candle printed here? It's got the open, the close, and the bottom third of the candle. It's right on a zone. It's got a nice long tail. The tail sticks out. There isn't any recent price action on the tail here, which is really ideal. Look at this tail. This much of the tail has printed in a unique area in the chart where we haven't seen recent price action. That's really good to see. Same thing down here on this tail. You can see that this tail over here has printed with some recent, in an area where there isn't really any recent price action. Look at that much of the tail is on a unique area on the chart. Going back, I don't see any price action where this tail printed. So that's a nice thing to see. And then I got a bullish big shadow down here that triggered the next candle, went higher on the next candle. And so there were several really nice setups recently. And then we had this sort of with the trend type kangaroo tail where the market is traveling down, it prints a kangaroo tail. It does eventually, after 2 touches, push through this zone, and it hits that first extension target down there. Now, the safe target is this area, but that's really close, right? When you're looking at this target, you go, okay, well, I'm selling right here. I've only got about 84 pips, and I've got about 164 pips of risk. So maybe I don't take that target, or maybe I only take a little bit of profit there, and then let the rest of it ride. And this is 375 pips to the next one. And if someone's holding this trade, guess what? There's still a possibility that this could cash out down here for 1,000 pips of profit. That's how I manage these all-time lows and all-time highs. Yeah. Okay, so let's take a look. Are there any charts that anyone would like to take a look at from a naked perspective? Again, we won't be using indicators. We'll just be using price action, and we'll be using the support and resistance zones, those historical zones, to identify any trading opportunities. Which pairs would you like to take a look at the moment? Are there any pairs that look good? The oil chart. Solomon wants to look at the oil chart. Okay. Here's the Euro Swiss. We had a request for the Euro Swiss. Guess what? The Euro Swiss is just messing around here. Not a whole lot of really interesting stuff. Okay, so we need a zone right here, right? Euro Swiss is caught between these 2 zones. We could get a nice bullish candle here. This could be a nice bullish signal. That's what it could be, a bullish signal. Don't have it just yet. If this candle decided to close really high up here in the next hour or so, that would be good. That would be really nice because that would make it a bullish kangaroo tail. But it hasn't done that yet. So I would say on the Euro Swiss, just waiting, really keen for a possible buy setup right here. What are the other pairs? Pound yen. Pound yen. Okay, this is a little bit interesting because the pound yen actually has fallen through the zone. So I've got a zone drawn here where the market held here for a bit. It held there. We had a bounce there. We had another recent bounce, and now it's broken through. So if the market, especially if the market comes back up and touches the pound yen zone here at 119 and gives me a sell signal, then I would trade it all the way down to 1687. What may happen is this might happen on a lower time frame chart. For example, the 4-hour chart may show a nice bearish big shadow up here or a bearish kangaroo tail. That would be a sort of a breakout where the market's broken out through the zone and it's come back up to touch it. So that would be a possible setup on the pound yen, is a sell through this zone here because it has, at the moment, it is lower than that zone. So that's a possibility on this one. This candle is not long enough to be a valid kangaroo tail for me. It would need to have a much longer tail for me on the pound yen, if that's what you were thinking about, Ulrich. I'm not sure if you were thinking about that. Here's our, this is a yen. Yeah, exactly. Ulrich, that might happen. That's what I'm thinking. The yen here, it's back. We've had the yen sort of mess around. It's had a few opportunities to break out above this consolidation box it's been in for some time. It had a couple of fake outs here, and it's come back into that box. So with the yen here, I could take a buy trade down here or a sell trade up there. But right now, it's just sort of in limbo. It's just in limbo right now. Yeah. The euro pound. Whoa, that's interesting. Okay, that's really interesting, isn't it? Let's back it up here. See, I don't have any zones drawn on the euro pound here. Let me see if I, So it looks like I probably should have a zone drawn down in this area, but we're not there yet. Okay, so this is an interesting chart, but here's the problem with the euro pound. The euro pound has not completely, we have about an hour and a few minutes for this candle to close. If this candle could close way up here near the high, that would be a really interesting candle to me and a possible buy signal. But if it closes down where it is now, which is nearing the midpoint of the candle, then I'm not interested in this trade at all. And here's what's going on with this one. See, the market sort of had like it jumped from last week, it closed here, and then this week it opened all the way down here. So it could print like a really nice buy signal, but I can't, until we see the close on here, I can't really make a judgment on that one. You might look at this and say, well, it's a bullish big shadow. Well, yeah, but remember that rule about having a bullish big shadow with the largest range we've seen in some time? This candle over here is much larger, and this candle is much larger. So there still are some bearish candles in the vicinity. So I probably wouldn't take this trade unless it closed really close within a few pips of the high today. I wouldn't be interested in a buy on this one. I'd much rather wait for the market to fall all the way down to 81.79 and print a bullish signal down there. Because I really want to trade off my zones. Why do I want to trade off the zones? Because that's where the market has repeatedly reversed, right? That's what I'm looking for, spots on the chart where the market has repeatedly reversed. And then I get price action that tells me that, ooh, it's going to reverse again. So, yeah, I would say that one's not so hot. What about the Aussie? Now, Dave says the euro pound is at a major level on the weekly. It opened below the major level. Okay, let's go back and look at the euro pound. Okay, so on the weekly chart, so Dave had a zone drawn. Where was your zone drawn, Dave? At what price level? I can't see it. I don't know where it would go. To me, this zone makes sense down here. We had this weekly kangaroo tail down here, and we had this touch down there. So I don't know where oh, look further back. Okay. Okay, so let's go further back. So Dave's got a zone drawn right here. I guess it would be right here, 82.43 or so, Dave. On this bounce? Yeah, that's a reasonable one. The only thing I would say about that is that why didn't the market respect it over here? The market, assuming it's 82.43, yeah. So let's look at this because this is an interesting idea. I don't like to mess with my zones. I don't like to adjust them. But if things like this happen, sometimes I will. So look, Dave's looking at this right here, which is the market broke through this level, came back and tested it again. Now, this is the 82.43 zone. I'm going to make this red so it sticks out so we can see which zone we're talking about as we examine this, because this is a good. So, Rap, these are support and resistance zones. I can send you a book on support and resistance zones. It's the Hot Pizza book. The Hot Pizza book talks about support and resistance zones. If you just email me, everyone here can get the support and resistance zone book, the kangaroo tail book, big shadow book. So what happened here was the market printed a nice zone back on the weekly, but then later on, it kind of didn't look so good. Let's look at the daily. I want to see if the market's respecting this, because if it's not, I get a little bit, okay, so it did touch it here on the daily. That was pretty good. And then it kind of broke through here. Okay, and then maybe it touched there, maybe it touched there. A little bit sloppy with the touches here and here. So I might look at this. Sometimes what I'll do is I'll look at this and go, well, these touches aren't really the best. If the market starts to, make some sloppy touches around the zone, what I might do is I might adjust that zone because I want to see the recent price action match it. I'll only do that if I get a lot of recent price action that doesn't match up. So for me, you could look at it as a soft beer belly. We talk about these zones being beer bellies. But when I see sloppy closes on a zone, then I get a little bit worried. So, for my chart, I would go with 8180. I would say it's slightly better. No, Serap, it's not an indicator. The support and resistance line indicator is just it's not an indicator at all. No, it's just an idea, right? It's just an idea. And the idea is that we have these spots on the chart where the market repeatedly reverses. And we're looking for these spots. The easiest way to do it, let's actually get a chart up and we'll do some of this. I just took a picture of the Aussie. What I'm going to do is see if I can bring up an oil chart. Because I know someone requested oil. Who wanted oil? Solman wanted oil. Let's take a look at. We'll talk about this Aussie chart here, and then we'll jump into oil. All right. I think I've got my oil chart up here. Let's see. Ooh, Solman, good call on the oil chart. Let's start. Let's take a look at oil first, because I love trading oil. It's one of my favorites ever. So everyone should see an oil chart on here. Do you see an oil chart, everybody? You really should see an oil chart. Okay, so what we have here, yes, okay. This is, let's draw some zones on the oil chart, and then we'll go back to the Aussie dollar. This is FXCM. Okay, so where do I draw my support and resistance zones? Well, there's one up there at a high. There's going to be one right about here. Why do I draw one here? Because I've got support and resistance on this zone here. There's definitely going to be one right around this level here. That captures these touches here, support, support, support. A little bit of resistance there, a little bit of support. This was a really clear one right here. I've traded several Kangaroo tails on this pair over the last, last 6 months or so, longer. Okay, so now let's take a look at where we're at right here. All right, we've got an interesting setup because the market has actually printed a nice Kangaroo tail right on tops of the highs here. Okay, so all right, I gotta delete this line or something. How do I delete this sucker? I'll just put another zone in down here. Okay, there we go. So, Serap, this is market scope. This is FXCM, Serap. Okay. I like to use a MetaTrader for the charts, but for the trading, it's FXCM. I like to use FXCM and several other. There's lots of great brokers out there, but for the charting, I don't prefer this chart. It's just I can't get an oil chart on my MetaTrader. So here we have and let me zoom in so you can see. Here we have a Kangaroo tail. Now if today closes like it looks like it's going to. Actually, oil is done, right? Is oil over yet? Is it still trading? I mean, on like FXCM, you can get a price always though. Let's just say that in the next hour, this chart closes about like this. What we have here is highs. The market came here. Look what it printed, a bearish big shadow. Oh my goodness. Printed a bearish big shadow and it fell back down to the next zone. Then it came back up, it hit the zone again, and then it fell. Came back up again. Came back up here, fell slightly, broke through, and came back, and now looks to have found support. It's a little baby kangaroo tail on the zone here. How would I manage this? I put my buy at 102.25, my stop loss at 99.80, and for me to find a profit target, I have to back it up here and say, where is the market likely to go? The first target would be up here around 105.30, which is a few ticks below the zone here. Why is that a target? Because look, the market found support and resistance back here. So that's really what I'm looking at here. I'm looking at a possible kangaroo tail today on oil. Now, this pair has a history of really nice price action. There was a kangaroo tail here. I took that one back in September, right? August. That was back in August. Boom, that one went up. There was another kangaroo tail. Right here. This one right here. Again, this was on the way up. Boom, it went up. There's another kangaroo tail right here. Boom, it went up. There was a bearish big shadow here. Boom, it went down to the next zone. Again, bearish moves were not as strong as the bullish moves. And then we've got another one right here. This one over here, probably not the best one because it's not really on a zone, and it's immediately after a big bearish candle right here. So this little one right here is probably not the best looking one. Probably not the best looking one. Yeah. So yeah, these sorts of things happen on other pairs as well, not just the currency pairs. If I look at the 8-hour chart on oil, which is what I can get here with the MarketScope platform, I can see that, look, there's a really nice 8-hour kangaroo tail, right? It looks like there was one back here. It looks like there was one over here, but look at this one. This 8-hour kangaroo tail didn't trigger on the next candle. It didn't trade higher. Remember, I would have had to have seen the market trade higher than the high of this kangaroo tail on the next candle. It never happened. That wouldn't have been triggered, this trade down here, unfortunately, right? So that's a nice look at what an oil daily kangaroo tail may look like right there. So I'm glad that, go back to what? The 8-hour chart? Yes, Dave? What would you like to? For me, Dave, for me, the market should break out on the next candle only. Yes, for me, I like to do that. Now, I have many naked trader buddy traders around the globe who will wait longer. But for me, I want to see it trigger. So, for example, this kangaroo tail back here, it triggered higher, just slightly on the next candle, right? This one down here, first of all, let's zoom in. First of all, the open and the close are probably not what I would call in the upper third. They might be a little bit too low. But the open and the close are inside the previous candle's range. Maybe they're not high enough. But regardless, it doesn't matter because, look, the next candle didn't trade higher. See how this next candle didn't trade higher? In fact, the market went down to where the stop loss would have been before, or likely, it probably would have gone to where the stop loss would have been before it started trading higher. I'm not sure if that's the case, but that's usually what will happen, is the market will go in the wrong direction during the Asian session. So this one did not trade higher. Did not trade higher. So this, yes, Dave? No. Okay, this is good. Thank you for the question, Dave. Does everyone see what Dave is asking? Okay, I said, let's say we looked at this candle here, this red one, and we said, this is a kangaroo tail. Okay, I'm going to take this trade. So what do I do? Well, if I'm doing that, then I'm gonna put my buy stop right there. Okay, cancel that. I'm going to put my buy stop right here, and I'm going to put my stop loss down here below the candle. And I'm going to wait one candle, okay? So that's based on this red candle right here. Now, again, I think this close is probably, the open and the close are probably a little bit too close to the midpoint of the candle. But let's just say, for argument's sake, that I was interested in taking it. All right. Now, it's also on a zone here, right? You can see this gray line indicates the zone. The red line is the stop loss. The green line is my buy stop entry. Now, I wait one candle. The next candle here goes all the way to where my stop loss would have been, and it does not take out my buy entry price. So guess what? I cancel the trade after this candle print. Now, Dave's question is a good one, which is this. Why won't I select this candle here as a new bullish kangaroo tail? Now, that's a great question. I'm glad you brought it up because I just sort of skipped over this idea that I assume that everyone has heard before, but I don't think I've talked about today, which is that really what I want to see here is I want to see this candle print on a unique area on the chart, right? We talked about this idea of space. If this kangaroo tail prints exactly where the previous candle printed, then I don't know that that's a critical turning point. If you look on the chart, and we can do this on any chart, and we look to those spots on the chart where the market has turned around and it hasn't been back there since, when it's really made a move, it's really reversed, like this one down here. Look at this kangaroo tail. The reason why this is such a great reversal kangaroo tail is because a large percentage of the kangaroo tail pattern from this part of the tail all the way down to this part of the tail, I can look back on the chart and extend this left and look left and see, is there any price action to the left of this kangaroo tail? Has the market recently printed where this kangaroo tail printed? And the answer is clearly no. Why is that important? The reason why that's important is because we don't know where the next turning point is in the market. But what we do know is they look like this. Turning points in the market do print at those spots on the chart where the market has not recently printed. We don't see a lot of price action at key reversal spots in the market. It just does not happen. Same thing if you look at the gold chart. We'll go back and look at gold in a minute, and we'll see the exact same sort of thing. Oh, we can also look at the Aussie dollar too. I know we still have the Aussie dollar on deck, so we can look at that as well. But my point here is that I don't know where the next reversal point is on the chart, but I do know what they look like, and they look like this candle right here. They don't look like this candle here. So while I've got a double kangaroo tail sort of setup here, I don't like to trade double kangaroo tails. And the reason why is because I want my kangaroo tail to have a large chunk of it printing on an area on the chart where the market has not recently printed. Now that was the case for the first one because we did have some room here to the left. If I look to the left here, I see all of these recent candles didn't print where this candle did, and then we'd have to go all the way back to obviously this kangaroo tail to see where the market did recently print in that area. But that's enough space. I'm going back, 5, 10, 15, 20, 25, 30, 33 candles or so. So that's pretty good, right? That's a pretty good space. This one's even better, but this candle here has literally no space. So to answer Dave's question, the reason why I wouldn't take this candle right here is because it hasn't printed at a unique area on the chart. In fact, the candle prior printed in the exact same area on the chart. So hopefully that makes sense. So when I'm looking for reversal type candles, I'm looking for those candles on the chart where the market has printed, where it just hasn't printed in some time. Okay? Now, you're going to have 19th of August. This one right here? Yeah. Okay, now let's talk about, now that's just for reversal candles, right? Let's talk about those candles where the market's traveling in one direction, and these are with the trend type kangaroo tails, like this one right here. See how this one is right here? These, yeah, I know what you're saying. You're talking about this one right here. This is it, right? 19th of August. No, that's 17th. Oh, this one right here. Oh, yeah. No, this would not qualify as a kangaroo tail because the open and the close are not in the top third of the candle. That's definitely not. This is no good for me. Yeah. Now, if I get kangaroo tails as the market's marching in one direction, we will get a little bit of room to the left. Like, see how this candle right here, the little tippy tip of the candle does have some room to the left. Ideally, what happens with these candles is that the market will move up, sort of consolidate, and then come down and print a nice kangaroo tail on a zone. And that kangaroo tail will stick out from recent price action. This one has a little bit of a stick out. This one doesn't have hardly any. Let me see if I can find a good example of that on another chart. Let's take a look at another chart. So that's the oil chart here. Here's our gold trade here. So I'm talking about this one with the red arrow here. Yeah. See this gold trade right here? Yeah. This is the one that is a with the trend type kangaroo tail. So the reversal kangaroo tails, you know what they look like? They look like the they look like the pseudo kangaroo tail that we just had a couple days ago, right? Again, pseudo kangaroo tail is a little bit tricky because they don't fit all the rules. The only rules the pseudo kangaroo tail does not follow, the only one that doesn't fit in is that the open and the close of the pseudo kangaroo tail are not inside the previous candle's range. And that's usually because the previous candle is really tiny. That's not the case with this one, but that's why this one just barely missed out on kangaroo tail status. Now, here's a kangaroo tail with the trend. Notice how I can take this much of the bottom of the candle and say, look, this candle has printed in unique space. We'd have to go back 4 days to see where the market actually printed where this candle printed, the tail of the candle. So that's really what I would call a kangaroo tail with the trend, and that's about as much space as I'm going to get on a with the trend kangaroo tail. However, on the reversal kangaroo tails, like the Aussie dollar, I can get a lot of space, right? Like the one down here, this one down here. So that's what I can get there. Okay, so that's the example of a reversal kangaroo tail, and you saw on the gold chart that was a with the trend type kangaroo tail. Now, let's look at the current candle because we had a question about this pair right here, the Aussie dollar. Now, the Aussie dollar is really interesting to me. I think long term, I think the Aussie dollar is going to fall. I think there's going to be great opportunities to short it. But right now, oh yeah, I would say 97 easily. Now, here's what I would say about where we are right now. Right now, I think we're going to be sort of caught between, say, 96.80 down here and possibly, 107 or 93 and 107. In other words, I think it's going to chop around between these two zones here for some time. But eventually it's going to break out, and I think it's going to break out to the downside. I actually think I'm actually keen to get a really nice sell signal up off of 107 and see and test my patience and see how far I can really hold it. Because I think this pair is likely to fall. Yeah, and the reason why I say that is this. The market's been making lower highs and lower lows. Notice that we had this high up here at 111, and then it came down here to 101. Okay, then it came up here and it peaked at 107, and then it came down to 93. Now it went back up to 97. I don't really use channels and trend lines. I rarely use trend lines, Dave. I think that the support and resistance zones are much more visible to traders, and more traders see them on the charts. So whereas the trend lines are a little bit difficult to draw, just like everyone else does. Everyone draws them differently, so they're a little bit trickier to trade off of. These are a lot more solid, in my opinion. Now, I was waiting for the market to break through 107. I said if it broke through 107, okay, then we're off to the races again. It looks like we're going to start trading higher and higher, but we didn't. It never made it through 107. So this is what I would say about the Aussie dollar. It really needs to either break through 93 or break through 107. If it trades higher than 107, then okay, maybe it is going to start trading higher. But if it can't get through 107, then I think it's very likely that we've seen it sort of roll over here, and we're going to see it tumble. Remember, we can get some excellent trades on the Aussie dollar. Remember what happened several years ago. Several years ago, we had this on the Aussie dollar. Let me show you. This right here is a kangaroo tail on the weekly chart. It has all the characteristics. It has a lot of space here. The open and the close are in the bottom third. The open and the close are inside the previous candle. The next candle triggers it, never reached the stop level, and it fell like several thousand pips. And this is the kind of thing I think may be available to us on the Aussie dollar in the near future. I do believe that that it's going to do something really similar to this, and I think it's going to be really fun. I would like to see a weekly setup that gives us a great reason to sell the Aussie dollar around 107, and who knows, that may happen in the next couple of months. I'll keep an eye out. But for right now, I'm basically looking for this pair to get caught between, say, this level down here at 96 and this level here around 107. I think it's going to just chop around here for a bit before it finally does make its move. So that's that, and that, just call that male intuition. That's what if it breaks 107, then all bets are off. Then we're off to the races again, and it's going to start trending up, possibly. But if it just chops around here, I think it's sort of lost its steam. One of the problems in Australia is that the housing market is sort of in a bubble, and it means that people are in huge debt for the real estate in Australia, and that's going to weigh on this Australian economy, and I think that that will definitely show up in the currency pair, in this currency pair, and others, of course. Yeah, Looney says it was the first home run was great. Yeah. The basically what happened is the government was paying people to buy houses. Whenever the government's paying you to do something, that's a bad sign, right? It happened in the United Kingdom as well, right, where the government would buy half of your house. Yeah, Looney, I'm with you, Looney. I'm right here in Sydney, and it's pretty crazy. The interesting thing now, though, is that of course the prices. Dan says it's gonna go higher. That the Aussie dollar is gonna go higher. That would be great to see. I mean, if the Reserve Bank of Australia is cutting interest rates and continues to cut interest rates, and the Aussie dollar goes up, that would be really interesting to watch. But we'll see what happens. Again, I'm not married to any idea here. I just believe that the likely thing is it's going to chop around here, and I think we're going to get a brilliant sell signal up here. I think that this year is probably going to be a bad year for the Australian economy, and I think that the fact that people are spending 3 times what they normally spend on housing in Australia is really weighing on the personal debt here, and it's not a good thing. It works as long as people keep getting raises and people keep making more and more money, but that's not going to happen this year. It's really slowing down. So we'll be interested to watch this pair. It'll be really interesting to watch and see what happens. I think that's going to be a fun one. Are there any last sort of requests before we... Looney says he's in the UK. Lucky you, yeah. Aussie yen. Okay, yeah, Aussie yen. Let's take a look at it. Okay, here's the Aussie yen here. Let me delete these red lines here. This is from another webinar. Some of you may have been there. Okay, so yeah, so the Aussie yen, sort of caught between this zone and that one. Even if it does end up printing a candle similar to this, it's not really a kangaroo tail. The open and the close are not inside the previous candle's range, so it'd be what we call pseudo kangaroo tail here. Yeah. Dave says it seems that most trades provide less than 1-to-1. Is that true? No, it's a personal choice. It's a personal choice, Dave. If you, for example, let me show you an example right here. Let's say that I wanted to trade this. Let me delete this box here. And let's say that I wanted to trade this kangaroo tail right here. And I say I want to sell the Aussie yen right here. So I put my sell stop down here at 79.30. My stop loss is 123 pips away at 80.53. I can target down here, which is, what's that? This is just about 1-to-1, a little less than 1-to-1. But let's say I didn't want to do that, right? Let's say I said, look, I don't want to go for 1-to-1 reward to risk ratio. So instead, I'll target this one down here. So I can do that. So now what happens, and what I suggest people do is once it hits the first zone is I move my stop loss to break even. So if I decided to take this trade here and I said I don't want to go for 1-to-1 here, then what I could do is I could shoot for this target down here and see what happens though is the market comes back up. It would have stopped me out at break even. Had I moved my stop loss to break even once the first zone was achieved, then the market comes back up and stops me out at break even right here. So that's a personal choice. Some people will ignore the first zone or just use it as managing their trade and move their stop loss to break even once the first zone is hit and then go for the second zone if they want to go for bigger reward to risk, right? The problem with that is that your win rate goes down, and a lot of traders freak out when their win rate goes down. So if traders want to have a higher win rate, they can do that, but they just have to make targets closer, right? If they, however, want to have the great reward to risk ratio, they can do that, but they're going to get probably more break-even trades and more losing trades, right? More break-even trades, and they're going to miss out on those small profits. So it's a personal choice. I don't mind having 1-to-1 because obviously your reward to risk ratio works in concert with your win rate. I know a lot of people like to think about reward to risk, but I like to think about that in how that works with win rate, because that's really where our expectancy comes from, right? Are we going to make money or not? So that comes from your win rate, your average win, your average loss. All of that sort of works together. Yeah. Yeah, you can run a trailing stop. There's lots of different ways of doing it. There are trailing exits that we use as naked traders that are irrespective of zones. There's lots of different ways to manage these. I agree with HH. Yeah, exactly. So there's lots of different ways of doing it. Absolutely. Yeah, Ganster says, I have reviewed some statements, and a trader had a win rate of 37%, but made a matza. Yeah, see, this is exactly this idea here, is that if you can suffer through mostly losing trades and have 63% of your trades be losers, but you go for the big winners, like a trend following system or a trader that looks for the really big home run, right? If you can suffer through all those losing trades, and psychologically that's difficult for most traders, but if you're one of those traders that can do that, you can certainly make a matza, as Ganster said. Yeah, absolutely. That's absolutely true. But most traders I know, they like to be right. Most traders like to be right, and so what that means is they usually have to have closer targets. Yeah. Yeah. Most traders like to be right. That's why so many traders like to scalp, right? Yeah. All right, guys. I want to thank you for coming to the Naked Trading session. I appreciate that you have a lot of things to do over the course of your day, and I'm glad that you were here. Thank you so much, Dave and Charles and Nicholas. Thanks a lot, Dave. Thanks, Zul and Saraf, Rahid, Chantal. Thank you, Chantal, and Cal, Phelan, and Chelsea. Thanks, Looney. Thanks, George C. Okay, Jack. Have a good one, everyone. Have a great week. See you, Mish. Bye, Jocelyn. Thank you very much, guys. Have a good one.